Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is Kickstart video. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. Today's date is July 30th, 2024. Let's get started. We're seeing the NASDAQ trading a little bit higher today. We do have Microsoft earnings after the close. By the way, I did a technical view on Microsoft on our website at ForexLive.com, so be sure to check it out. This week we also have Apple, Amazon, and Meta all reporting of the seven magnificent seven. We're seeing yields mix with the shorter end higher and the longer end lower today. Let's take a look at some of the major currency pairs. We'll start with the euro versus US dollar. I'm looking at the hourly chart here, and what we see in the hourly chart and what I pointed out in trading yesterday was this cluster of moving averages and retracement levels comes between 1.07948 and 1.0817. Inclusive is the 200-day moving average, which we just fell back below that level after trying to stay above it for most of the trading day. We had a little dip below in the Asian session, a little dip below in the early European session, but seeing a rotation back to the downside. The 50% retracement, that's of this move up from this low back in June to the high price that we saw in the month of July. The level comes in at 1.0806, and we're back down testing that. Finally, the 100-day moving average at 1.07948 in trading yesterday. The low price, you can sort of see it right here, came in above that level, below the 50%, but above the 100-day moving average. So if the price is able to get below this cluster of moving averages, it would increase the bearish bias. That's a downside for the pair half trade. Trade is looking toward the 61.8% retracement of the same move to the upside here. Conversely, if we can't get below it like we couldn't do yesterday, could see a rotation back to the upside. So we are lower on the week with the price moving lower in trading yesterday, but we are consolidating near this cluster of support, which is, typical. The market needs the next shove one way or the other. Of course, we have the FOMC rate decision tomorrow, along with two other central bank rate decisions, not the euro, but the pound and the yen. So that may have an influence. Also, we have, again, all those earnings coming out this week, which could impact the US dollar and other currency pairs. Let's take a look at the daily chart just to see where we're at. And we don't often do this, especially in the up and down markets that we've seen late. But you can see that the high price that we saw in the month of July came up and extended above this high right here, but couldn't get above this high nor the 61.8% retracement of this move down going back to 2023. We're in between these two trend lines, so we're consolidating the range, and right around the midpoint of those this area right through here with the 200 and 100-day moving averages now finding support. So you get this view of where we're at, and we're right at the neutral area, right near the midpoint of at least near this range right here, and between these moving trend line levels. So you get the idea. We're looking for the next shove in the euro versus US dollar. Still haven't seen it yet, but we're looking for it. Let's take a look at the dollar versus yen. And in what was a key here is the break above the 100-hour moving average. Now, admittedly, the break yesterday above that level did not lead to lots of momentum. We rotated down the European session, but tested a 38.2% retracement. That is, if I go to the 4-hour chart, of the move up from the December low to the high price that we saw in the month of July. 38.2% retracement comes in 153.654. Now we've been below that level, but holding that level and trading here today or near it is a bullish signal. They had the attempt to move to the downside, found support against this old level trading last week, and now moving to the upside here. So that gave the buyers a reason to push to the upside. And as you can see, we also extended above this swing area, which is good. That level comes between 154.52 and 154.83 or 88. So if we can watch the 52 level on the downside, as long as we stay above that level, the bias remains more to the upside. That's off this 4-hour chart. Let's go back to our hourly chart and looking at that, the price high that we saw in trading today did find resistance against the 200-hour moving average so far. Here's that swing area just off the 4-hour chart. If we can get above the 200-hour moving average and then the 100-day moving average, that would open the door for further upside potential in the dollar versus yen. So be aware of these areas at 155.21, 155.62. Watch 154.52 as close support in the dollar versus yen now. Finally, let's take a look at the sterling versus US dollar, and this on the 4-hour chart. We did move below this trend line and the swing area right through here in trading on Monday, but we rotated back to the upside, and we tried to hold support against that level once again in trading here today, but in most recent bar in current we've broken below that level, testing the 50% retracement of this move to the upside. So like the euro versus US dollar, we're waiting for the shove, but the bias is dipping more to the downside, or looking more to the downside, at least in the short term here. If we can stay below 128.60, this high of this swing area, then I think the bias remains lower for the sterling versus US dollar. Finally, before I close, I want to take a look at the euro versus yen. Yesterday I did a technical view of this currency pair and outlined the 100-hour moving average as a level of importance. You can see the number of different times the market tested that 100-hour moving average. Well, in trading today, the market moved up to that level and initially found sellers once again, tried to push lower but couldn't, and then broke above the level right here and moved over 100 pips to the upside here, moving up toward the 100-day moving average because the moving average was moving lower here. There's a big move here, but the bias remains neutral between the 100-day above and the 100-hour moving average below, but a good trade opportunity for those who took it on the break of the 100-hour moving average and trading here today. So be aware, be prepared. There's opportunities in so many different currencies, and I try to give them to you in on forexlive.com. So good fortune with your trading. My name is Greg Michalowski for forexlive.com.